Welcome, 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 welcome. Welcome, traders. Welcome, welcome, welcome. Welcome back to the live session. Hope that you had an enjoyable trading day and looking for some new entry today after yesterday's pretty successful session. All of you traders beginning another trading day. And this is another significantly important trading day here that we're looking to see some trading opportunity throughout the session here. We are looking at this market. Here is the longer term picture on the news that you can see. So some of the fundamental news that we will be going through to see that in fact which way the market is heading back. Okay, so let's first of all looking at the, if you look at, we are looking at some of the fundamental today. Here is coming up later in NY session, we will be looking at FOMC meeting minutes. So this is today's primary focus here on the news. If we look at, it is a detailed record of FOMC most recent meetings, providing in-depth insight into the economic and financial conditions that influence their vote on where to set interest rates. So this is an indication of the future rate hold or rate cut. So this is a future rate hold or rate cut decision that coming, and that's gonna be significantly important news later. And if we look at the market in terms of that here, and I'm looking at, if you look at the 4-hour chart on gold, and this is the market that is currently trending, and we will be looking at gold, and also we will be looking at if any instrument that is trending, such as the euro dollar or dollar yen, British pound US dollar. Now first beginning with XAUUSD, and then also we'll be looking at currency pairs. So ready for an analysis? Would like to see how many members are focusing on currently. Welcome, thank you. Cool. Now we see that this is a pretty interesting market at the moment. If you look at the daily market on gold, and I would like to start with the weekly because so far, after the previous weekly comparatively less volatility, that if you look at narrower volatility, after previous weekly narrower volatility, this week we can see the market has entirely broken the previous weekly low. And we hear that after this break, the market is trying to pull back again to the upside. And there has been a significant shift in the market sentiment, if you guys looked at. And that market sentiment, that if you look at this market structure here, all right, so with that significant shift in the market sentiment, we can see that the price of this level has entirely broken back below. And from the weekly, this market, if we look at as the market open, if you look at here, this is the weekly open. Now, I would like to really make a comment here, but it may not be 100% correct, but there is a very higher chance. And I would like to see how many of you really agree or disagree with that. So if you look at the weekly opening, okay, so there's a gap open, right? So if you look at, there isn't any long wick at the top. What I think that the market may continue to drop, all right, maybe even to almost half of this previous week, and at the end of the week, that means at the end we might see that pullback again, closing above, and the next week the market to push back again to the upside. So if that's the case, if you look at the monthly here, the price is at the monthly support level. That means we might see that deepen and then to return back again to the upside here. And that's the price action that looking at. Therefore, you see that there is a head and shoulder and the market broken back below, pullback, and there is a higher chance the price to eventually feel that. And you see this is a long wick, right? This is imbalance. The market moves from imbalance to the imbalance. So that means because the market left significant imbalance in that direction, and it created a trend line here, right? So if you look at here, this is a trend line, and that trend line, we could see that this market to retest the trend line and then to break below to the imbalance of this market, to this zone here. And there is a complete void here, which is pure fair value gap. Therefore, from the multiple time frame analysis, there's a higher chance the market to melt down. Do you see that meltdown? How many of you agree with that? So I would like to start with a poll. Now really poll help because I may not be always correct, which is very humble to be in trading, but most of the time we need to look at from the probabilities perspective. So I'm starting a poll, and poll really helps. So what is your bias on XAUUSD? All right, so this is what we are looking at, that bearish and bullish. So I'm posting two pool here, and if you looked at that in the past, most of the time the pool came out to be correct 90% of the time, over 90%, almost 95%. So the results on the pool could be significant. Now here I'm looking at, it's the current level, the 1 hour bearish engulfer, right? It formed that 1 hour bearish engulfer, and the price is here showing up that this market to eventually we could see that a break below here in that area. Now going to the very lower time frame here, if you look at the market trend is bearish 4 hour high, which is this one, and taking this level, this is the 4 hour level, and this is the previous session's low. The market might break that low, could bounce back up, or you could see that continuation. So from the analysis, from the technical perspective, we will be looking for selling in this market, right? This is what we will be looking at. And therefore I'm looking at for there is a head and shoulder here as well. If you look at this is a head and shoulder, and break from this head and shoulder, showing up that this market may continue to trend back down here below this support level, and therefore breaking above here. All right, so from this support level, the current trend line that you can see that we have drawn, this is what I'm looking at with all of you guys for a possible sell entry. This is our possible entry if the market goes up for retest, or if we see that continuous downtrend, then we will be looking at for selling in this market. Welcome. Now looking at for potential bearish setup, there is a significant imbalance, and we'll be looking for entry in that area. Okay, we can see that pullback as we discussed, and if the market moves enough back to the upside, we will be looking for potential sell here in that market. All right, so you can see there is a break above here, as we discussed that the market is just approaching the trend line. I'm preparing for a potential entry in this area here. Are you guys ready for that entry? Must be risk managed. And as we open quite a few trades in the past as well, this is what I'm looking at for an entry of this level here. Now for our entry, so if you look at the 4 hour here, the market is reached that key level, and the stop loss that I will be keeping of this trade that I'm opening sell, because the market in a key level and I want to get into that entry with proper risk management setup with 77 pips stop loss, keeping the profit target below here. We'll be targeting to 3 times and we will be later adjusting if needed. With the 1 hour, yep. And I'll keep the stop loss little up here, and the stop loss must be 120 pip, must be risk managed. So I'm looking at this market, this trade to 2 to 1, and I'm also sharing the same trade in the premium group. All right, so we are on a trade, and the stop loss here that I placed at 4925, and we might hold a little longer here for potential move back below, and setting TP target to nearly at 4888.90. Okay, so I will be also explaining in depth with these trade traders, because this is a, if you look at this, is the trend line, and the market has, we can see there is a break below, and off that break below the price eventually broken above here, and that's what we want to see, that this market is approaching that key level, which is important to look at. Now at the moment, if you look at here, the lower time frame, the market has shown significantly downtrend. And the main key here, guys, is that we want to see a trade that is in the direction of the trend, and that is risk managed. And the market more often will move usually in the major direction of the trend. All right, so let's look at here. We are on the trade for this potential move back below, and if you guys, anyone running or opened? Can you share in the chat group, in the live chat, to see if you are on the trade as well? We're nearing to the okay, we can see that down drop. Yes, I'm on the trade. Joy, welcome. Thank you. All right, so you want to take this one here, right? Yesterday also you had a successful trade, and today also you want to take that one as much as you can, as there is a potential for downward pressure here. And the market is on a trend line, right? So when the market is in a trend line, this is a downtrend, and this is the area that I'm looking at for some a bearish pressure in that area. Thank you. All right, so let's have some music on. Come on, get up. Cool. It's pushing back down here, and this is what I really expected to happen. Although the market may do at any point in any time. So my entry at 4913.01. I would like to adjust my entry here, 4913.01. Cool. All right. So the market is significantly at the moment in this area bearish. So there is a chance for a meltdown, and there is if you look at the FOMC meeting minutes coming. So how does that also we are looking at now in terms of the geopolitical tension, right? So it's also a factor that I use in my trading, which is called a sentiment analysis. Have you got heard of sentiment analysis ever? I'll be sharing with you now how I do the sentiment analysis. That give me always an additional edge in my trade. So if you want to know how to do the sentiment analysis, then stay connected. It will change the way you look at the market. So if you're willing to know the secret of my sentiment analysis, then make sure you like this stream. I see that if the likes is going up, then I know that how many members truly want to know the secret of understanding the sentiment analysis. I see the likes is going up. That's awesome. So we will be looking at the core sentiment, how the market is driven due to because the market is a product of the emotional response. In fact, especially in lower time frame, the market is driven by emotion, right? And the sentiment is all about emotion. How does the emotion is playing out around the market movement, or due to some headlines, which is a part of day-to-day life. So how can you use news headlines in your trading? It's also another important point to look at. Now we can see here from the lower time frame, I see bearish, so I'm still holding on to that and still looking for the market to show that. I cannot see this screen. Really? No, it's open. It's open. Probably it was in the past, but it's turned on. Screen is open. Thanks, Skinsino. Thank you very much. Are you in the trade? Yes, I am on the trade. Of course, I am on the trade. Any trade that I will be calling here, I will be also on the trade. Here's some, I would say it's still showing in a pullback area. it might try to break that high, but my bias here is highly bearish. So let's see that where it is trying to be heading. If the market breaks below here, there might be a stronger rejection down here, and there is some upside move from the forward perspective, breaking that high, which might be creating a liquidity sweep here in that area. So let it pass on there, that we can see. All right, so the market has crossed this key level. There's an inverted head and shoulder, but even if in case the market crossed so far, I will still be looking for sell. Right, so in that case, we might be looking for a recovery trade. Even in case the market goes beyond this, the current level of resistance on the 1 hour chart on XAUUSD. All right, so we'll be looking at that level here. Okay, so with this break above, it's just gone some area that you can see the market is approaching, and we would like to see the price to retest and then to potentially to reject back. So little downside, but we're expecting the market to fill that level and then to come down further here. And now if this is if you look at here, this break, if the market reverse off that level, that might create a new area of value. We're going to see a move here. Now, this break up trend line is a little surprising to me, but let's see that where it is heading. Now, this is where there is a previous, if you look at this, the previous liquidity zone, and Okay, so this is now a 5 minute candle close. But we are looking at this market to eventually break further lower here. It's gonna be a little surprising, but we are looking at here to see how far it might be heading. I'm still holding on to that. In case if it is going as directly to the stop loss, then probably we'll be looking for again entry. It's going to a crucial level. The market is here. It's a long term. If you look at from this level, we'll be looking to potentially sell, but this is a resistance line. If you look at the previous 1 hour, there's a liquidity sweep here, and in case the market is crossing that high, we will be readjusting again for another entry. So the key here is to do the risk management regardless of stop, like the PEEP. We have to make sure that this risk is properly managed. So that's how you can keep a consistency for each trade that you will be opening. Looking at here, this is a purely liquidity sweep. This is happen really in the market, but when it happens, that is why the risk management is very important. Here is basically the market is approaching to gain momentum, which is a strong liquidity sweep. Because if you look at the daily, from the daily, we saw that there was a significant pressure in the past back below, and this 30 minutes candle is too early, moved really much farther back, and I wouldn't move the stop loss. I want to hold it to see that what's happening. It might get rejected off that level, or it might go up to fill some of this imbalance and could continue to drop again. So some reaction coming off this level. Now, depending on how the market will create the structure, all right? So it's almost reached that resistance line. It took the trade at 0.3828 support. 0.3828 support. What's that kind of support is that? This is my entry level at 4912.95. Might consolidate here for a bit more time. This is high liquidity zone now at the moment in that area. If it goes out, then if it crosses this high, we will be taking a second trade after breaking above once the market reverse. Just keeping it in the list to see how the market react to that level. We're getting some, if you look at, this is the 1 minute price action, and the market is on the key level. All right, so sometimes I would take a second trade in this situation, but I would like to keep it a little slower here to see what's happening. Market in a very key area of value, right? So it's getting reaction of this level. Okay, if it is breaking that high, then probably we'll see significant move back above, and it just crossed the session's high. Okay, got out with this trade, and we'll be looking for further entry. There is a false breakout, the market reversed, but we'll be looking to see how we can take the next trade. I think this, if you look at here, it's moving up, and there is a higher chance the market to now to potentially test that daily high, and then to possibility to reverse again. From the lower time frame, the prices, if you look at, this is the 1 hour price action, it's very unusually dropped to that key level, and we will be looking at, I will be interested for the second trade shortly. So this is a very unusual move back to the upside. You can see the market is just reversing off from our zone where we place stop loss to the 45 minutes remaining, right? So looking for any entry on an opposite direction. I'm looking at okay, if it form any kind of double top or head and shoulder for a potential reversal. If you look at, this is the 15 minutes candle close of this support. It's entirely one single move. It's a strong, if you look at, it's a false breakout that you can see, a very stronger false breakout. And now there is a, if the market not being able to break further here, we could see that to test the low, and I'm prepared to enter again as soon as it appears. let it prepare here. Okay, it entirely crossed this high. Okay, looking at here from the intraday, it got a rejection. Now this might bring that market to retest the 4-hour 20 EMA, which is we see that there is an opposite directional move, and didn't retest this trend line properly from the 1 hour if you look at, and that is where this trend, if it wants to continue to create a new higher high in that direction, for me what I think is still may not be fully, like with this break above and the order block here is in this market in that zone, which has not been properly tested. So there is a higher chance for the market to continue to downtrend. All right, so here the 30 minutes candle closing in 5 minutes time, and this is a direct hit to the order block. So this is a previous order block here. Now if this is a stronger order block, we might see a return of that level after the candle close. There's a double top. The market, you can see there is a mild reversal confirmation, and I'm late. That's fine, guys. This is here. The key is to take the high volume session. All right. Now, today coming FOMC meeting minutes, which is what we will be looking at here. This is December, February, is upcoming. So if we look at the fundamental power of trading, so usually during the FOMC you'll see the market shows higher volatility. Okay, now with the higher volatility during the FOMC, we usually see the market will move. Now today we see there is a false breakout here. Okay, and usually the market gain momentum for the bigger move. And understanding that, if you look at this 15 minutes volatility in terms of ATR, these three candlestick pattern had a very high ATR, which was, this is in a downtrend expecting to drop further. But this move that you can see to the upside, now there is another rejection, might be starting off for another move. So it happens especially during the FOMC or when there is a FOMC meeting minutes, because of the higher volatility comes along with the upcoming event. Now the question is that how we can use, or how to apply, rather than use, I would say that apply the fundamental in trading. And we discuss about the sentiment as well. And so if you look at today's FOMC is about, if you look at here, discussing about the future rate cut, I think 8 times per year, this 3 weeks after the federal fund rate is announced. So there is a, if you looked at, we have seen there was a potential for, okay, there is a sudden spike in also WTI price today after the previous pullback. What could be the reason? From the weekly, it dropped back below and started to bounce off this level. DXY, we have seen after yesterday's unusual move back to the upside, slowly there is a daily doji. Now looking at all of that will give you a better understanding how this DXY doji, daily doji, in fact now representing in the market. This is highly bearish signal on DXY, right? Because firstly, there is a long term. If you look at this, the daily head and shoulder, and then entirely broken back below, pullback. And I think this daily pullback, if you look at the Fibonacci, though I no so 61.8% Fibonacci level. So the pullback on the Fibonacci for this entire move is 61.8% after this head and shoulder formation. And the market of this pullback that you can look at from the weekly or the monthly. So usually monthly is high probability. So from the monthly 50%, from the daily, if we look at that here, drop 61.8% exact to that point, right? Yeah, so which is the golden ratio. Now later we saw the drop, another 2 days, quite a few days of sideways movement. Now this market structure that you can see on DXY, after this pretty long week rejection, the market is highly likely that we could see a break below. But one thing that we can see that on the daily on DXY, if you look at this, is a trend line, and the market might create again any kind of false breakout upside before it eventually trend down here on DXY, and the market may continue to drop back below. So if DXY is becoming bearish, then from the higher time frame, gold might going to be bullish. But lower time frame, we can see there is an imbalance here in this market. So after this move, it's now breaking off this level. You see, this is the 30 minutes candlestick close on gold is with a big long candle, which was a very unusual move. Usually false breakout happened that way, a bigger, which is liquidity sweep. Now that's why I use also automated system that helps me to eliminate many of the false breakout happening. This is sometime now there is smart money uses the advanced artificial intelligence to trade the market, right? So if you really, as a retail trader, I do use all my strategies now in an automated, so that this kind of trap I can avoid. And it's available also in the premium group. If you are in the premium group, probably you guys have seen that we are running in the group. Now for trading manually, it's the only thing that we can rely on the risk management. Okay, all trade will not go in your favor, but it's all about the risk management. Now here, if you look at that, the double top, okay, breaking below, entirely has broken back below, and expecting that now this market to eventually the market left that imbalance here. Now in this area, if any lower time frame stronger liquidity sweep here, we will be looking for entry. All right, so back below for selling this market in that direction. Awesome. Patience is key, especially not only in winning, also in any situation. When you become more patient, you will see the market will show up new trading opportunity for you anytime. Okay, so here is where you're looking at. Of this level, the market is slowly building its momentum, and after this such a long candlestick pattern, and I don't think the market is going to fill that zone. The market may break below here. Now with this bounce that you would like to see to go up for, this is potentially in that area, deeper pullback. And let it move up, because it has dropped further. We'll see going back up. All right, so here is the catch for the price to show up again another entry. Okay, here we see some upside bias after this pretty long doji from the 15 minutes. This is a 15 minute pin bar and entirely rejected off that level. Now on a pullback. So first you would like to see that it's going up enough for this pullback, and if it entirely break to the upside, that you will be waiting until you see that rejection. We will be waiting for that entry. Here's the key level looking at. All right, so okay, with this double top, it slowly breaking that low, and this is a confusing area that sometimes you'll see the market will not give you a clear directional bias, and if it isn't, we will be waiting for the confirmation as much as you have as per the strategy. Because if you look at off this double top, the market entirely broken back below. Now it's moving in this sideways movement, and So I don't think it's fully ready for any potential downside. So off this level here, the market is slowly moving back to the upside here. Okay, still pumping back to the upside. I'm with fully it can be an entire move back above, or you could see that forming a triple top or penetrating above here the market to continue to trend down. Now with a potential DXY downtrend, right? So the market is not only driven by the technical, also you can see there is a significant fundamental factor also playing the role here. So from the bigger picture that you can see, basically DXY showing now significant rejection. So if you look at this move that we have seen on DXY that I also have discussed in the weekly Forex forecast as well, probably you guys have seen that. So this is the DXY's previous area of value, right? So which is the previous resistance line that DXY has crossed. And once DXY has crossed this previous resistance line, which is high area of value, and with this cross of this previous resistance, which there is a high area of value, there is a stronger liquidity sweep, and we can see the market has entirely rejected off that key level. Now with that rejection, the longer term trend on DXY is now here bearish, and there's an interesting level that we can see. If you look at, there was in the past a large head and shoulder that I'm looking at the 4 hour, and of this large head and shoulder the market tested the neckline, which is in an angle, and now we can see the market drop again with another break above of this head and shoulder. We can see that this is the head and shoulder, another retest of this head and shoulder with a larger ATR candle. So especially if you see that a reversal pattern tested by a larger ATR candle. So if you look at, this is an head and shoulder, break below, retest of this neckline of that head and shoulder, which is a support down resistance with a larger ATR candle, the market rejected back below. It's a higher possibility that the market to continue to fall back in the direction of the major trend here at the moment. So therefore, if DXY is maintaining, that means that reversing back in the direction of the major trend, that is where we could see that on XAUUSD also could reverse back in the major direction of the trend. But at the moment on the lower time frame, that I was expecting the market to drop, but we see there is a change in the sentiment. Probably I could be that in that situation the market may reverse here, and we could see that continuation on an uptrend. So until we see the directionally confirm, we will be waiting to see if the market is having its directional bias back again, right? So and in terms of the technical, we can see there is a agreement. So there's some news might also impact the pricing. Okay. So this is also a high impact news. IMF urges Japan to keep rising rates, avoiding reducing sales tax. Okay, so if JPY is like, if yen is going up, that means like if interest rate increase by BOJ, then this is potential for bullish for JPY and bearish for USD JPY, and that is also contributing for potentially downward trend on the XY. Now we can see that gold started to show its move of this support. Trend line breakout retest is moving in the direction of the trend. To delete that levels. Still doesn't look to me very strongly bullish. I see there is a little bit of so that conflicting price action with DXY and gold. DXY locally we still could see some upside bias for a pullback. If that's the case, then DXY after a retest here, if you look at this is the 5 minutes candlestick, but it's a very narrow one candle is being formed on the 5 minutes, which is still not showing a strong bullish bounce. If it is not closing as a stronger bull candle, we may see that this market to potentially have a rejection of this key level. Candle close on the 5 minutes again above. USDJPY in a range here. So this week, as with the upcoming FOMC, we can see that pretty strong volatility on gold, and later today also there will be some what is your next resistance level where you're looking gold ahead today. We see gold is potentially moving to the major direction of the trend, and if you look at the daily, this is the daily support. The market dropped to that low. Now it will be a little bit surprised to see that if gold started to entirely reverse off this level without feeling the imbalance here, because there is a significant imbalance in that market from the technical point of view. Now gold market, as you know, it's not only the technical, also fundamental is playing significant role here. And if there is shift in the sentiment, we might see that gold again going to be bullish to the major direction of the trend. Usually when tension arises, especially in economy or geopolitics or any areas, that's where the market shows this kind of price action. And So there's a some this news also might be we can look at for USD JPY. Japan exports growth surges to over 3 years high. So here is the market is pushing that level here. So I'm still going to see there is now the price has rejected off this level. That means there is a higher chance that now to continue to rise. So we are looking now an uptrend here at the moment. So it changes, it reversed entirely in the major direction. Can you go up to 5,000? Well, if this market resuming its trend, that can be well above. But I still don't think that gold is fully ready for a big uptrend. And there is still room for sideways movement this week. The reason is if you look at the daily, starting from this point onward, every day the market is maintaining that series of lower high. So if you look at series of lower high, and because the market is maintaining that series of lower high, right? So there is a higher chance the market to eventually break below. And with this series of lower high, this is still there is a higher chance for the market to, from the technical, to maintain that level and could come back for retest. And if we look at the weekly, it left, there is a gap open here and the market drop. After breaking the previous weekly low, it's now slowly pushing back up. But there is a higher chance that the market to retest again, and if we might see that bigger bullish move later, but still the market is a higher chance for correction depending on here. 5,000 is here. Daily level. Now we have to look at how the market maintaining this trend. So let me ask you with a poll. What do you think? Ending the previous one. So bullish bearish almost. So bearish was nearly to 52%. So which is almost nearly to 50-50. Starting another poll that do you think it's gonna go back to 5,000? And I'm asking you the same. So share a poll. Okay, here lower time frame, it's a non-linear uptrend formation that we can see. And this non-linear uptrend, the market has entirely started to move back in the direction of the trend, where quite a few gap opening. Changes the trend. The candle close above entirely. The new one open with a gap also. And it's approaching that level. Now coming to this 1 hour support can be an important level that we can look for potential entry back above here. Okay, we see that some break below. Now we might find a potential entry with again risk management. I'm looking to see if there is an entry here. So you can see that there's a So this is 1 hour price action, and after the previous 1 hour candle close, it's entirely broken above. Okay, cracking that up here. This is an overextended now, back to the upside. Here's the support, and looking for the market to have rejection of this level, and daily price is still moving in the direction of the trend, and here's I'm looking at for the price to go up, creating a new higher high. Okay, so this 5 minutes candlestick pattern that we can see, this is a bounce of this liquidity zone. It created a support level here, which is high area of value now at the moment. And upon candle close, the market might test this level or may continue to rise. So there is a higher chance now for trend continuation, that we can see the market is evolving for bullish momentum. And the daily high is there, the previous daily, it's showing that bullish move. So therefore, now we are looking at bullish trade. The market sentiment changes. This is now shifted to a bull market. So this is another, I talk about the trading psychology when we trade like that. When the market changes, we also change the direction, because this is how a trader thinks, that the market bearish, we are looking for sell. The market changes, we'll be looking for buy. So we are waiting for a false breakout candlestick pattern. So if you look at this 5 minutes price section, that you can see, starting off this point, every candlestick pattern is a green candle firstly. Okay, so if you look at green, 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 all of that, followed by, and we can see the market is maintaining this series of high and low. So that means at any point you could see that deeper pullback. So we need to wait for that pullback and then rejection. Now looking at the 1 minute here, this is the current level of support. So you want to see that as a significant breakout structure because it is now an established uptrend. So in an uptrend, the best area that I look for is from the breakout structure. So if you look at, let's say the market is trending, creating series of higher high and higher low. In an uptrend, we'll be waiting for a breakup structure. That means any of this swing low to be entirely break below. And you see that this is the current swing low here. In that move, there is another swing low. So at any point in that trending market, which is part of the movement, you see the market will break any of this key level of support. That means that lower time frame key level, not the higher time frame. That means that swing low here in that uptrend. And once we see the market has maintained that breakup structure, we are looking at entry. And that is where high probability trade comes, because when there is a breakup structure, there is a liquidity trigger. The market moves from liquidity to liquidity. If you look at, this is where there is a higher. Now if you do a contour, so for this, if you're not sure about the contour, is like if you look at the weather map or any kind of map, you'll see that if you do a contour of the order, that you'll see that this zone is a high concentration of stop loss, right? Like that. So if you do an order like, okay, do a contour. So this is a high concentration of stop loss. Now what is the advantage of knowing that? Is that when there is a high concentration of stop loss, what's the benefit? Is that all the stop loss from the buyers is actually a sell order. So the market is basically here, what we are doing is buying and selling. And for the price to go up, the buyers has to be more than seller. But what's the point of buyers stop loss? Is a sell order, right? Then why the market will go up from this? Because when a buyer's stop loss hit, there is a sell order. That means sellers. So when there is a seller, more seller here, there is a more buying pressure also will be there, because more seller, more opportunity to buy. And once there is a buying triggers, the market will bounce back to the upside. That's how you can trade with the smart money. Okay, this is what I really can say. Okay, no problems, you're welcome. All right, so that's what we are looking at. The current level, that 4943 or below, for us to be able to look for that entry. Okay, so the current level of support is here in the market. Now there is a drop in volatility. And again, looking at little higher time frame, if you look at the 15 minutes, that's a big green candle formation here, which is pretty bigger bullish candle. And there is a strong buying pressure has come, right? So there is a shift in the market sentiment. That means that DXY might be showing stronger bearish movement here as well. What's happening with the WTI? WTI also showing stronger bullish price action in that area. Okay, so a little drop in volume, which pushing that market in a sideways. Now, when the market drops in if you look at the volume drop, we could see that there is a higher possibility for the market, in fact, preparing for potentially larger movement. Because when there is a drop in volume, so basically it's in a accumulation phase, right? So this is distribution, accumulation or distribution, sometimes confusing. Yeah, accumulation phase. It's a little slower movement. there's a triple top here, and I think that triple top could bring that market below, and if it drops well below of this triple top, that's where you'll look at for an entry. Okay, there are some downside pressure that you can see. You want to see that the price is coming to any of this key level, and we will be looking for potential entry if the market shows significant pullback here, and there is a chance for this pullback. Now how far it's gonna come down is important to look at. Back to back 3 long week. Current support level is here, and All right, so with this support again, the market slowly builds its momentum, and we are looking at this market to eventually continue to trend back above, as we are almost nearing to the progresses with the NOI session, and as 4952 support is important level that we are looking at to create a new higher high. Okay, I'm preparing for a potential entry after break of this support here. Okay, some bullish momentum being shown up here in this area, and there's a 30 minutes candle closing with a narrow, so we see there is a closed on 30 minutes candlestick pattern. So for an entry, this is the support that I was looking at, 4943. If we enter off this level here, the market might move up, and very short period of time the price may reverse again back to feel that imbalance in that area. So let's look for the high probability trade setup. You can see that breakdown here, and it's interesting music. Yeah, the only thing that we have is here it's start to move in a sideway, and I don't see any big move possible here at the moment. There is a this zone entirely is bearish fair value gap. This is the 1 hour bearish fair value gap, and slowly building momentum. The market is not being able to break that high. You see that whenever it's approaching the resistance, getting a stronger rejection of that level. So that means it requires deeper liquidity. Okay, so any fundamental news? That there is nothing that we can say at the moment. Therefore, the market is mainly driven by the technical aspect. Now, slowly there is bullish trend continuation that you can see of this doji. It's breaking off this support. Now, for us to be able to look for this entire move back to the upside, how does the DXY? Okay, there is something very interesting. So in the last few candlestick pattern, if you look at the DXY, has printed bullish candlestick, and if we look at XAUUSD, also printed bullish candlestick. Right. So that's a little thing that we need, not little, it's important thing that we need to pay attention, because both of these instruments, when they're moving in the same direction, right? So if you look at the 1 hour, also kind of rejection. So with the gold price suddenly started to be bullish is a sign of the investment going to the safe haven, right? And here is the move that you can see of this support level. And now from this, this is a structure which is the previous resistance turning support. I'm looking at a possible entry of if the market retest and reject of this level, because it entirely has broken above, creating an inverted head and shoulders. So there is a higher chance for a trend continuation, but you want to see if the market is testing that level here now as a support and showing that the trend continues here back. Every day is different. So I was just looking at one famous quote. Okay, this break below is essential to see the market is coming for enough pullback. Okay, that's significant. We're going for an entry shortly. Okay, off this level started to pull down further back below here in that area, and Okay, so it entirely has rejected off that level, and with a long wick doji in this area here, this is a pretty long doji that you can see, and now it's on a, that we discussed, that key support level, approaching that level here. that's the market is really, I'm really feeling funny because it shows a stronger momentum and that entirely rejected off that level. Now what we need at this point in that area, guys, is to see that if it is in fact creating a larger head and shoulder for drop again, because this 4-hour price action here, it was showing a very promising downtrend, just to see the market unexpectedly, that I would say, that reverse of that level. Now it moved really overextended well above. With this overextension, the price now potentially breaking below to that level, and if it is a change of trend, we could see that the market to drop well below. And so I would like to look at one important quote that, let me find it out. money made in make from sittings, not from trading. That's a significant quote. And also there is another one. He said that the best approach in trading is not to expect every day to make profit, right? Someday that the patience is the best way. Usually the approach comes from traders, you'll see that is with a losing trade to increase the risk, but it's to decrease the risk. Looking like sell to me. Look, this is the price action is pretty strongly rejected back to the upside here. Now at the moment, this is I think there is a little bit of confusion between buyers and sellers that you can see. So you can see that there is a stronger bullish move and now forming a long red candle. So what happened that the market little confused. This is what happened, especially when there is a change in the sentiment. So, and also there is, if you look at, suddenly there is a bullish move on DXY that you can see, right? So, and because DXY started to go up, and gold also you can see there is a bullish move on gold as well. So usually they move in opposite direction, right? Mirror. Gold drop, DXY up, DXY down, gold up. Now they are moving in the same direction. So there is a kind of this sometimes rarely happens. Probably there's some might event may happen, which minor or major, but depending on that, we will see the market is rearranging itself. At the moment, I will keep watching the price action. We'll be waiting for further entry. This market at the moment here, it can be bearish, forming a head and shoulder, dropping down, or it can continue to rise. So until we see that, till 4944 might be the pullback zone. If this market drops well, all right, so if this market drops well, we might see that it's gonna go deep, right? If this market continue to rise, we could see the delay. I would say that still it's not in a clear trend. It might come for a deeper pullback and continue to rise, or it can be a false breakout again and dropping to the imbalance. So better to wait to see a little further confirmation later with the progression with the NY session. And I'm looking to enter later and any trade if it appears. So until the market shows a clear price action confirmation as per the strategy. As we are on the 4th day coming up on trading, tomorrow Thursday, and later today we see that there is FOMC meeting minutes. Also we will be looking at potential entry before that FOMC meeting minutes. And I hope that you enjoyed this session here, and I will be coming on live again tomorrow to trade at the same time the market. Until that, traders, hope that you enjoyed. Stay well, stay happy. We'll see you again very soon, shortly after trading.